Okay, guys, I'm back again now. We're banging those out today when we're going on a roll because Super Bowl tomorrow. I do live in Cincy, so um, go Bengals, Who Dey. Um, it's kind of like a sad Super Bowl because in a way, because I also do love LA, and I have a lot of ties in LA, so this is gonna burn. But either way, like I said, it's a win-win situation for me personally. But I'm so happy that the Bengals and Cincinnati is finally back on the map um, since 31 years ago. Anyways, go Joe Burrow, go Mixon, and go Bengals and Jamar Chase. So, anyways, back to our you know our usual topics and what we're talking about. So, how will inflation and the Feds? How will the Feds raising their rate hikes? Because they're kind of forced at this point because they've ignored it for such a long time. That should have been like like over a year ago now. That should have been implemented. Them widening the cushion is kind of like like a wound that you suffer. If you don't deal with it right away, it only gets worse and it manifests through, and then eventually that's when they have to amputate something. That's if not if it's not too late that you lose everything. And that's where we are at as far as this fear of this. And this possibly has a lot to do with why there's such thing about talks of politics and war and all that stuff, because war brings resources bring cash, money, and it helps you with your what you're going through. So I hope that we don't go to war in general, guys, but it looks like it's inevitable at this point. And it could be a managed war in a way where what you need, I get what I need, and the only people that suffer are the unfortunately um, are the people of the residents, the public, the home crowd of whatever region is going to go down in. So all fingers crossed for all people out there, and I hope for the best for everyone. So, anyways, guys, when they raise the rate hikes, that automatically starts to kind of like counter the inflation. So that way, that it's not just constantly spreading because more money on the market, like boom, 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 more money, more money, more money. The easing part, what they're talking about, the market easing program, um, is obviously constantly raising the inflation percentage and levels. And I don't even think whatever is reported is even close to what it really is. Uh, well, we should know that by now because the media is always spinning some sort of narrative that is being given to, other than the realistic one. So when they do implement these rate hikes and they fork them out, then people and institutions will start forking out some of their long positions, starting with crypto. That's just their depository. So that's the first place they're gonna go to is their crypto positions. We'll see. We'll fact check on this, guys. Um, and then eventually, also, it will reach out to the, excuse me, to the stock market and to the exchange, because to the forex exchange, because obviously a lot of uh, currencies are just going to roll under. And this is why like a few nations here now, but soon will be many, have changed already to blockchain and switching over to the Bitcoin as their government, you know, currency, form of currency. Um, it's just because the Fed, when they keep printing more dollars, if that nation has to use dollars by force in a way, it's kind of like by nature you just have to use it because that's the world currency at the moment, and for the last 35, no, more than that, even like since basically the 70s. Um, so all these nations that have dollars, when the feds print more dollars, their dollar that they have just lost its some of its value. And the more that we print, because we have the luxury of that, the only Federal Reserve banks only exist in the U.S. So we can print as much as we want. They have to take, deal with that currency. But the problem is, when they deal with that currency, is that the more we print, the more they lose. And they still can't do nothing about it. That's what you call world dominance, guys. Um, so when they start forking out their positions, the institutes, back away from the politics a little bit. So when they start forking out their positions to start covering, why is this good ultimately for the meme stocks? Mentioned a little bit in the previous couple 2 videos ago that the reason why it's like that simple is because the meme stocks are their positions that they are not winning in. If any institute is in any of those meme stock positions, holding any short positions in any of those companies, or a regular position, not even a short, that means they're losing. Because we all know, look at all the meme stocks, they're all down. Uh, so even if they're holding a regular position, they're losing. Even if they're holding a short, they're definitely losing. So to continue holding those positions, they will be and pay also the interest rate hikes that they have to pay to now due to the Fed's releasing that based on whatever percentage is going to be. I mean, if it's just 1%, oh my God, that's doomsday. Um, Everyone is saying is going to be a quarter, um, and even that is going to hurt so much. You just have no idea. Just wait and watch and see if that's what they release, like rate hikes. So they will be forced to go fork out and liquidate many of their long-term positions that they're very profited. They're in the profit in slash crypto markets also same thing. But it starts there, then it starts working its way down to the stock marketplace that they have, like their Microsofts, their Amazons, their Teslas. I mean, it started already with Facebook. Tesla has already taken its own fair share, but I think Elon was very smart. He started it himself so he wouldn't lose. So that, like, the amount that he sold, he paid in tax, but he continued to sell, which is, to me, is an indication that he sold all that to have more cash on hand, keep it down, so that anticipating that Tesla is going to plummet, then he can come back and swoop many, many, many of his shares that he sold previously for a high amount over the 1200, I remember, range, $1,200-$1,300 range, and now he's going to possibly get it back down around the 400-500, who knows, maybe even lower than that. I mean, I remember like about 3 months ago, I I was on a can't remember, what was it? It was I think on Weeble, and I went to Tesla and I wrote a comment, and I said that this was, and it was, that time it was like about $1,289, and I posted, and I said specifically, I was like, oh, this in months time will be down around 850, and I have the post. I swear, just like I will post it in the community somewhere. Like, I'll comment in the comment section. I'll post that post where I post to these guys, and they started just making fun. They're like, "Oh, take your ass back to AMC," because my name on there has AMC into it too. And I'm not promoting Weeble, guys. By now, we should all know that no certain exchange is better than the other, except for liquidations and liquid money. So I do have more than one brokerage, but I'm not gonna transfer everything and like literally everything from just one and just keep it all in one. Don't I will never keep all my eggs in one basket. So I did a lot of transfers here and there and there. And again, since they're all DTCC protected, and I've seen it with my own eyes. In fact, Apex is like the first one on there because of the alphabet order, not because they're the best. But I did even my homework on searching like how many bad things they had in the past 20 years, like fines they had for malpractice and stuff like that. They all have crap on their books, guys. Fidelity, all that stuff. Again, I'm not gonna insinuate on any app or broker app. I think they're all the same. They're all DTC protected. So therefore, my point is I don't keep all my eggs in one basket. So I spread them all out. Again, this is not financial advice, guys. I'm just speaking my mind and my opinions. So when they start forking out these positions that they have and liquidating so they can support whatever losing positions that they are into before getting bankrupt or getting margin called, what do you think? How long will it take? I mean, imagine you holding like a 25-pound dumbbell or a 10-pound dumbbell, like even that small, right? You're just holding it down. You're not picking it up. You're just holding it. You know, you picked it up and you're just holding it. It seems like you're not doing nothing. It's simple. Hold it for 5 minutes. See at 2 minutes and see what the feeling will be like. Hold it for 5 minutes, even if you were that strong and you held it for 120 seconds straight, just like that. 5 minutes, 10 minutes, 20 minutes, an hour. Eventually, you're gonna drop it. Like, but it's so much different. It's so much different when you're not holding anything. You're already these guys are already holding so much weight and leveraged on all these other positions, to the point where whatever profits and money they've made throughout all this corruption campaign they've been doing over the last year and a half, they're gonna fork all that out quickly if they don't just let the squeeze go. They'll let the squeeze go, let the people mangle each other out, let them, a lot will choose low numbers, a lot will choose somewhat good numbers, and a lot will choose high numbers, but eventually they will still be able to live on to, you know, see another sunshine, if they do it that way. If they don't, and they're just hoping like, government bail me out, it doesn't look like it, because the government doesn't want to do something like that unless the Fed wants to go ahead and take all their assets, like what they've been doing with the repo and reverse repo transactions, and then give them the money they need to pay for this when the time is right. And then they'll have to go, all these hedge funds and institutions will have to go back and kind of like be an employee for the Federal Reserve, and the DTCC, because they will start working back on the market. They don't have their positions, but they're secured with the Federal Reserve and the DTCC in particular. They make money, come back and buy their positions slowly and slowly back to get back on their feet. So kind of like me fronting you until you get on your feet, and then you got me back, but with a little percentage as well. So I don't think that we will go down that route. I think that's way too crazy, because I mean, come on, the government owns all the market at that point. All the positions, like the government will own Microsoft, all of it. It will own, because you know, you're talking about all these hedge funds hold like 2%, 1%, whatever, 0.5%, 50%. Well, not that point. You know, like you get my idea. The point, you get the idea here, that all of them, if they're all going back to the DTCC to get covered and selling all these positions, and you're talking about the government will own all the companies globally. Yeah, it sounds so like crazy and nice and all that stuff, but I don't see it going down that way. That's a communist movement, not a democratic movement, and that's not who we are. So I see it going down the first one. Rate hikes go up, these guys start liquidating, you start seeing crypto falling off the face of the earth, unfortunately, but not for long. It will make its rebound, because after this goes out of the way, the meme stock saga, then that goes up. You just have to watch out which ones you go into. Much love, guys. Might make another video later on tonight. Again, like and subscribe to this channel. Thank you so much. Have a great weekend, and Hoo day.